We're in for a really rough go of it. I would just say, as we enter September right now, we're politically obviously in a very challenging spot. You have midterms coming up. We got an economy that is, well, lackluster at best. And there's a kind of brewing trade war, if you would, and whole new kind of trade war. One that's not really involving tariffs, one that's maybe not quite as public, but one that's very serious. And by the way, one that has to be had with China, of course. Hello, everyone. Welcome to the program. It's really good to have you here. I am Trish Regan, and this is the Trish Regan Show. Please subscribe on Apple iTunes if you haven't already. Subscribe on the YouTube and Rumble channels if you haven't already. And know that parts of today's program are brought to you by Legacy Precious Metals. There's never been a better time to invest in precious metals than right now, especially with all this inflation, right? So go to legacypminvestments.com for more. Again, that's legacypminvestments.com. This is going to be a challenging time. I don't think there's any other way to get around that right now. And it should be expected. Look, September historically has always been a really rough time for the markets. In fact, everybody thinks of October. They get so worried about October and Halloween and blah, blah, blah. And, some of the big crashes going back to the infamous one in 1929 happened in October. But in reality, September is the month that you should actually be most worried about. September is the month where we've seen a lot of downside. I mean, August was pretty challenging already. The theory is behind this that, traders come back. They've spent the whole summer away. They really haven't been focused. And all of a sudden they come back and there's some, tax selling that happens within mutual funds. And so consequently, you have more of a downdraft in the month of September. Interestingly enough, we've had a pretty bad go of it in August, right? And I've been telling you along the way, as we've been discussing all of these news items that have come forward, to be very, very cautious, because to me, it's a trader's market, right? Like there's not a lot of upside being in the market at a time when you know that the Federal Reserve is going to be raising rates. And that's going to happen in a bigger way at the next meeting, at least 75 basis points. I mean, I think they ought to be doing a whole lot more. I think it should be at least a full basis point, but we'll know more in time. Nonetheless, any way you slice it, it's going to be a challenging month. We do have real impediments in front of us. I mean, you're already seeing within the job market space, more and more companies announcing layoffs. You're already seeing more difficulties just because consumers aren't spending as much, right? I mean, why are you going to spend as much if you get that much more inflation? And inflation is not coming down the way the administration would like you to think. And I'm not going to rain on their parade too much, other than to say they are all so foolish and were so mistaken, both in terms of what they did from a policy front on the Federal Reserve, and then now look at what they're doing. They were mistaken. They are mistaken when we look at what Joe Biden is doing, sending helicopter money to Vassar grads, as we see everyday Americans struggle with filling their gas tanks, putting food on the table, and now having to confront a housing crisis in the middle of America, which surely is going to be here and will happen, that very much affects blue collar Americans. And that's because the Federal Reserve has to raise rates. Why? Oh, because they left them so low for so long. I mean, that's just what happens, right? Like reality catches up with you. Anyway, the other thing going on is this pending trade war with China. And I'm going to get into that in just a moment, because we had a big semiconductor company coming out saying they're not going to earn as much money as a result of that. But before I do, a quick shout out to my friends over at Legacy Precious Metals, especially in light of everything that's going on. I think that you want to be protected. You want to be diversified. So there's a lot of different ways to do that. One of the ways that I like, and I've always liked, is through investment in gold. And there's also different ways to do that. You can actually own the real stuff. You can have a gold backed IRA, whatever you decide to do. I encourage you to give my friends over there at Legacy PM Investments a call. Their number is 1-866-589-0560, 1-866-589-0560. I will put it in the show notes for you. I think we have it on the screen if you're watching this on video. LegacyPMInvestments.com is their website. You can get a free guide to investing in gold right there. And I encourage it. I really do, because we're not out of the woods yet. I think things are going to become more challenging. I mean, in my own personal life, I've become more guarded, and in terms of investing, have been more encouraged by things like treasuries. Who would have thought, right? But I mean, if you're trying to keep some powder dry right now, a 6-month treasury note, a 1-year treasury note, those look promising in that, maybe we'll start to get some yield. Now, you don't want to go in for too long. You don't want to go in for too long because I actually think those yields are going to go up, which means I think things are going to get worse before they get better. So you might have a little bit of time here, but I guess the answer is sharpen your pencil, start looking around. I mentioned earlier this idea of a trade war and these market challenges that we're facing right now. I just want to point out that Nvidia, which is a major chip company, came out yesterday afternoon after the closing bell and said, look, we're not going to make as much money. They actually filed a note with the SEC saying they anticipated $400 million less in terms of their revenue because they're no longer going to be able to sell chips to China. I'm going to quote from what they said here. It was a filing with the SEC, and they said that there's a new license requirement for future exports to China, including Hong Kong, that would reduce the risk that the products may be used by the Chinese military. We don't want our chips being used by the Chinese military now, do we? I actually think this is a pretty sensible thing to do. I've been pushing this forever. I'm glad to see that Intel is moving its headquarters to Ohio. We need more chip companies, more really important companies, and by the way, not so important companies as well, here, headquartered domestically in the United States of America. The company, as I said, expects to lose about $400 million in potential sales in China in the current quarter after previously forecasting revenue of $5.9 billion. The new rule would also apply to sales that they might have to Russia, but apparently they don't have any paying customers there, so it's not going to matter as much. But the technology stuff going to China, that's a big deal, right? In terms of our fears that the military is both going to use and also steal our trade secrets. The trade secrets, they sort of matter. I mean, right? That's kind of like all we got. And one of my biggest frustrations has always been that Wall Street's so interested in what's happening this quarter, what's happening this year in terms of their profitability, that they're not thinking about what's happening 5 years from now, 10 years from now, 30 years from now. I mean, China has their 100-year plan, and we're like, okay, what's going on this quarter? And so there's such a myopic interest in what's happening in any given day, in any given week or quarter, because of the influence of the stock market. And by the way, look, I'm still pro-capitalist, and the capitalist system isn't perfect, but it's the best that we have. Nonetheless, this focus on the here and now prevents us from really looking at what's happening long term. And that's where we get into trouble, because we're so focused on profits that we're not thinking about the strategic interests of the United States of America. To me, this is where government has to step in. This is why I applauded being tough on China in the previous administration. I'll give some props here to those that are trying to develop policy that will strengthen the U.S. and make sure that China doesn't have those strengths that we've developed, right? This is actually important stuff. So the chip policy, semiconductor policy, does matter. And it may mean that some U.S. companies aren't going to do as well. Well, I'm sorry. Okay, you know what? That's a lump I think we should all be willing to take, really, because, otherwise the alternative is pretty disastrous. We're heading into a long weekend, of course. By the way, Friday we get the jobs number, so keep a lookout for that. It'll be very interesting to see. We were upwards of 500,000 jobs added to the economy last month. Low unemployment rate, 3.5%. I think there are some reasons for that, in that a lot of people have figured out sort of other ways to exist, right? If you would. I was looking at some data showing that the use of food stamps, for example, is up 89% from where we had it pre-March 2020. I think that's pretty striking. To me, that tells me more and more people are using these food stamp programs. But why? Why, if the economy is so good? Why, if the unemployment rate is only 3.5%? I suspect because more people have figured out effectively how to exist, how to kind of work the system in new and creative ways, which is, not good, right? Not good for our economy. You also have increasingly more of perhaps an underground economy or a gig economy, as they like to call it. Anyway, Friday, we got the jobs report going into the long weekend. I don't know if anybody's going to go out and see a movie, but it's a good chance for me to plug one that I think you might be interested in. And this is, it's called LifeMark. You can go to lifemarkmovie.com if you actually want to get tickets right now, because it's coming out right after Labor Day on September 9th. It's a movie that celebrates the gift of life, and it's by the Kendrick brothers and Kirk Cameron. You remember him. In this movie, it tells the story of David, whose comfortable world is turned upside down when his birth mother unexpectedly reaches out to him, longing to meet her 18-year-old son that she only held once. And with the encouragement of his adopted parents, he winds up embarking on this really life-altering journey of discovery that leads to a staggering truth from his past. It's inspired by a true story, and LifeMark is a powerful reminder that one decision, one choice can impact so much more than one life. It's pro-family, it's pro-love, it's pro-forgiveness, it's pro-reconciliation, and pro-new beginnings. So I encourage you to check it out. You need to go to lifemarkmovie.com, see LifeMark in theaters nationwide beginning, as I said, September 9th. Again, lifemarkmovie.com. Go and check that out. I hope you're looking forward to having a great weekend. It's a good chance to celebrate with your family. We should talk a little bit more tomorrow as we head into that weekend about what Labor Day really is and how important labor really is to our economy. And I feel like labor's gotten kind of shortchanged, if you would, just over the last couple of decades. And this is what's so wrong. I think the unions have completely shortchanged their members. They haven't represented them in a way that matters. We have shareholders that matter so much, and all that capital is more valuable than the labor itself. Maybe that's coming back into some kind of equilibrium stage as a result of so many people pulling out of the labor force. I hope it is. I think it's critical. In order to have a successful economy and a successful middle class, you need that strong labor market, and you need people to be able to earn decent livings, which, let's face it, I think has gotten increasingly hard. And it's the reason why Americans feel so shortchanged. Well, that and a few other things. You should watch yesterday's podcast or the day before, because I had a few things to say about the FBI. Anyway, a lot of this is contributing together, I think, to cause people to have this frustration that's coming right up to the surface right now, and it's understandable why this is going on. Anyway, watch the market very carefully today. We'll talk again tomorrow because the jobs report is coming out. I think there's just so much happening right now. It's the reason why I'm hesitant about jumping in, but I also say, hey, you know what? If you're in it for the long haul and the market's going way down, these are the times that you do want to be in. I don't know as necessarily we've seen enough fear. Let's keep watching the VIX. Remember the VIX that I tell you about? That's the fear gauge that measures effectively that emotion that you see in the market. So we'll talk more tomorrow when we see that, along with the jobs data. And I'll see you then. Do make sure that you subscribe to the channel, you subscribe to the podcast, and we'll chat tomorrow.